I hate it when I forget to start the recording. There we go. So we're going to have some fun today. We're going to chat about what's going on with the meaning of Brexit and all that kind of stuff. Mike Traeger is joining us from Dallas, Texas. How are you today, Mike?
I'm trying to stay cool in more ways than one.
Okay. And then Michael Bishop, who's just back from vacation in East Germany, he made it out alive, is with us from Zurich. Correct? Michael, are you with us still? Where'd Michael go?
I was in the Zurich airport for a short time about a week and a half ago, if that counts for anything.
Well, it does. And so, Michael, we've lost your audio.
Yeah, sorry. I have a little problem with my computer today. Maybe a reboot in between, but...
Okay, well, welcome.
now I'm back.
Okay, I'm glad that you're with us today to give us at least a sample size of one regarding the European take on the Brits exiting the EU. Now, some of us think that it's a blow for freedom and liberty amongst the folks in Great Britain. However, others in Europe don't see it that way. They think they basically see it as something not good for the Great Britain economy. But we'll get to that in just a little bit. I want to remind everybody that all the materials we present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. And then here's Michael's disclaimer. It is the European disclaimer, and I'm trying to keep these. There we go. I can still see. Basically, it is a lot similar to ours, but basically it says that he is not making any suggestions or taking any compensation for what we are going to be chatting about today. So let's get going. Let's just jump right into it. I want to remind everybody that at Active Trend Trader, I'm a teacher at heart. Have been from the time I was like 18 or 19 years old, and so we do lay very heavily on helping folks understand the aspect of technical analysis, and we've had some excellent series over the last few weeks. Once I got moved over here to back to my old home. This past week we were talking about how to make sure that you're on the right side of the trend. Mike Traeger, you were there for that training. That was for some pretty interesting stuff, wasn't it, Mike?
Yeah, I thought so.
And so this week we're going to be looking at, asking the question, why Keltners and moving average envelopes? So the insight that they can provide us into what's going on with the internals of individual stocks and or indexes and or index ETFs. And so we'll be hitting that on this coming Wednesday evening. And for the premium members, remember every one of the training webinars have been recorded and they are posted under training videos on the website, so you can, and along with the slides. So here's my take on what's going on this week. Last week we were all getting ready for Brexit, and that was after the Fed had kind of left a bad taste in the mouth of the institutional guys by their action or inaction at the June Fed meeting. But this week what we find out is, okay, now what? Brexit. Great Britain is now gone from the EU, and this means what? Don't do that to me. The S&P is currently in the process of testing lower levels of support. The NASDAQ has just about made a 100% retracement of its May rally, and the Russell is still holding up a little bit better, and some of the influences that I look at going forward into the next week or so is one, summer doldrums. We also have to remember, Mike, I was looking for that seasonality in the markets, and I went back and I just did a review between the months of July and August, and to my surprise, that out of the last 10 years, 67 or about almost 7 out of 10 years from the mid-July time to the mid-August point, the markets were down. Now, does that mean we just jump on that information and trade it to the downside? No, it doesn't. We use our technical analysis. But there does, at least in the short term of the last 10 years, there seems to be that summer sell-off that happens. And the other influence is people are going to be, chewing on it a lot. What does Brexit really mean? I mean, what are the thoughts on that? And the question that comes up, okay, do we buy the opportunity, or do we look at this as a potential first thrust down in what could be a more severe downtrend to come later in the year? So with all that said, Michael Bishop, what's the European view on Brexit?
Well, first thing, UK or Great Britain gone from the European Union, it's not technically true. I mean, in fact, there is now a vote within the next 2 years. The exit has to be executed.
Oh, okay. So they're not totally gone.
It's unclear, and it's very unclear how this works. Both parties said they have plans and can execute this, but there are a lot of question marks. One question mark is, for instance, that Scotland now had a strong vote for the EU. So how is this? And the Prime Minister, who is a liberal conservative, has resigned.
Okay.
And he will not lead Great Britain into these negotiations. And a possible follower may be Mr. Johnson, and I would call him as a populist, more to the left side.
Okay.
And I think it's a big risk for the economy, and it's also a difficult situation for all parties. I mean, going back to the time before EU, kind of that's not feasible, or I mean, there was really the time where every country has its separate economy, and where the Italians basically only could buy Italian cars, and the French only French cars, and the Brits only Brit cars.
Yeah, they bought basically Jaguars, right?
And then, I mean, if you also look now this negotiation between the US and the European Community on this TIP agreement, I mean, two big parties like the US and the European Community can set up such a deal, but UK would be, I mean, they had kind of separate negotiations with all major players, and I mean,
needless to, yeah.
I think as a fact, or most probably, I think if the Brits are part of the community or not is globally almost irrelevant. Is for the US almost irrelevant, and so there the market correction is an opportunity, or you can technical sign. But for UK, I think the next 2 years will be quite difficult. I mean, they even could go back to a recession, and it's I mean, they have very strong financial markets, and these guys are quite flexible, And as long as the whole deal is not really settled down, they won't invest. Or if they invest, then in their subsidies abroad, and then they will have a similar problem like the Swiss, that you have always the currency that is sometimes the currency fluctuations. And
Okay. So it sounds like there's a lot of moving parts to this particular situation. Mike Traeger, is this a buying opportunity, or is the reaction in the stock market today basically much to do about nothing, and is nothing but a knee-jerk deal, and that 2 weeks from now, life will go back to normal and people will be, shopping at Walmart and everything will be wonderful again, and the market will continue to plod its way upward?
Well, I think what we're seeing today is very much a knee-jerk reaction, and given the result of the UK referendum, a very predictable reaction. Is this a buying opportunity because of a one-day drop in the markets? Maybe not. There may be more downside to come, and the charts and the candlesticks and everything that we learn about and watch will tell us that. Some volatility is to be expected right now, and there may be more selling to come. This could be the dam breaking. But we've been talking for a long time about how overdone the markets have been, how overvalued they are. The strong resistance with the S&P around 2100, and even after today, we're not that far off of that.
Right.
Can you play a short-term bounce here? Yeah, probably. Is it a good longer-term investing opportunity? Maybe not yet.
Yeah.
And that's how I feel about it today.
Okay. Now, one of the things I was noticing is, the market's down 500 points, but it was up 200 points yesterday. And so for something that was, if the situation is as dire as they think it is, or initial reaction, you would expect it to be able to get down a lot more. Now, might this grease the skids for further fall? Sure, it could be the catalyst that does that, especially after they do some evaluation of what it means for the global economy, for the British economy, for the U.S. economy, and the European economy of Great Britain exiting. That could potentially, lead to some. Well, it's going to lead to one of two things. It's going to lead to a nice market rebound if it comes back as not a big deal, or if it comes back as a real huge negative on the market, the central banks around the world aren't going to be able to fix that.
No, and I think the bigger risk here, I've been doing a lot of reading this morning about all this, and I think the bigger risk in the intermediate to longer term is that, there are other entities, sovereign entities, other countries in the European Union that aren't really happy with the European Union bureaucracy in Brussels.
Right.
And now that they're seeing that, it is possible to break away from it, you may be, I'm beginning to read some noise now coming out of Italy, coming out of France, coming out of the Netherlands. Some of the right-wing parties in those countries are saying, well, we're going to have a referendum also because we want out also.
Yeah.
And if those swords start rattling, and they probably will, the uncertainty that creates could lead to, significantly more downside in the financial markets.
Yeah. And so now, Michael, did you say Switzerland? Switzerland's in the European Union, right?
No, it's not.
No, it's not.
It's not.
It is not. It is not. It doesn't share the currency either.
Same like Norway and Iceland.
Wow, I always thought the Swiss were really smart people, but that's another story. And so,
No, and the Swiss uh, have negotiations with the European community since 10 years or so,
yeah,
and it's a little bit a strange setup. For instance, all so if a drug or if a soup can or whatever gets the approval on the European level, the Swiss automatically accept
yeah,
this.
okay,
If you as a German or Portuguese or Greek, if you have a job in Switzerland, if you get a job offer in Switzerland, you can come into the country without a visa or a green card or something like
yeah,
that.
yeah. So,
So, so it's kind of a mixture, and the UK will, I think, definitely go for a similar approach, but it will be more difficult as the country is much bigger, and and especially as Germany, I think they cannot. So if the deal is too good for the UK, other countries will follow, and
yeah,
they will avoid this.
yeah.
And
So,
I think at the end, I think it's a fact that the European Community side has a heavy government that is overloaded, and there is a bureaucracy around that is not needed, etc. But on the other side, it's I think really a necessity and a very good thing that it is at least a strong economic community, and that there are no borders, and I mean on the other side, for instance, the borders, every country had its strong borders, and
right.
there were thousands of police guys and how do you call these guys that check if you have some things to declare, etc.
Yeah,
And all of a sudden, this has everything has been eliminated, and you don't have an increase or almost no increase in crime, and all this VAT stuff and the custom stuff, etc. I mean, it's horrible with 26 countries that have 5 million inhabitants or so.
yeah.
So that's really a necessity.
Well,
And
like I said, it's
we'll
going
see.
to be interesting to see how it works out. Let's get on with our. Here was the percentage of stocks above their 20-day moving average as of last week. It has moved to this as of today. Mike Traeger, it's getting down into interesting territory for us in that it did drop down to, it fell almost to 20 but rebounded earlier in the day back up to about 34. And since this was such a significant fall, it is not a trigger to get long on anything. It is just okay, we're watching it. We could be closing into very interesting times. If the July to August scenario repeats itself, it has repeated itself, 70% of the time over the last 10 years, then in reality we could be waiting around till the end, midsection to the end of August before we would be really getting back into a buy territory. Don't you agree, Mike?
Well, yeah, possibly.
Yeah.
Possibly. Where this indicator gets really interesting and really predictable is when we start to develop some positive divergences
Right on.
in terms of higher lows with this, as we're experiencing lower lows in the index price action.
Right on.
We certainly don't have that yet. I mean, right now all we've got is a one-day phenomenon.
without a doubt. So right now, yep, it's oversold, but it doesn't mean it's not going to be more oversold. And I think the longer term chart, the percentage of stocks above their 200-day moving average, and this is a composite of both the Russell or the NYSE and a couple of other indexes. But as we can see, in reality, today's action just barely budged it. Okay, you lost about 3%, dropping below the 50-day moving average. And as we've talked previously, price action is still working within a lateral, a lateral and a potentially, we've called this a topping pattern, which it has shown that it is that, but working within that basically a topping pattern. But it has not broken down. We're sitting there. We know that on the S&P or the spiders, this reflects the spiders, there is in fact strong support down there at the 180 level, and we know that there is strong resistance up here. And we're up at 204. I mean, as of when this screenshot was taken, which is in reality not. It's still operating very nicely within its, the range of this particular pattern. And so it's nothing to, write home about. We'll see on the daily and the weekly charts what those tell us, but as it stands right now, the weekly candle for this week is just one big long candle. To the downside, thanks to today's action. As you can see, the Dow, has dropped about 1% from where it was last week. Same thing on the S&P. Both the Nasdaq and the Nasdaq Composite, though, again, about a little bit over a percentage point drop on those two, and about a percentage point drop on the Russell. And so, from a bigger picture perspective, even though we had this huge big sell-off today, the values of the individual indexes hasn't moved a lot from where it was last week. I mean, it's almost, I won't say it's negligible, because there's a really large range on the specific move this week. And who knows, today's blowout may, in fact, if you're an IBD subscriber, may have them change their outlook to what's the marketing correction, because there is a lot of volume changing hand today.
Yeah, marketing correction would be their next downside shift in their outlook.
Yeah, so let's take a, oops, I gotta move this up. And so on the screen, can you guys tell me something? Can you see, I'll take a look at it myself here. No, you can't. Okay, cool. I wanted to know if you can see. I'm really pleased. We were out on the beach yesterday after doing what we needed to do, and I get a call from our mover saying that our household goods arrives today, so I can stop living off a blow-up bed, and I will have an actual dining table rather than a fold-up table as both a table and a desk. And I'll also be able to add back in my second monitor, so it'll make doing webinars a lot easier. And I know I shouldn't complain, and I'm not complaining. Okay, here we are, S&P. Daily chart, weekly chart on the right. There we go. As you can see, we have started using the trend candles. We had basically this push up yesterday, and well, actually started on Monday, pushed up, actually turned the candles blue, then they went back to red, and then pushed back to blue yesterday, and we basically closed up here at the high yesterday, the 211, and then bam, the candle again is now red. Now where did we go? We went directly back into a level of support, which is down at about 2040 level. And the way I'll be looking at playing this going into next week is I'm not going to short here because it's too close to support. What I want to be doing is I want to be looking for what happens when price action gets back up around where the 50-day moving average is, or maybe even a little higher, the 820 cluster. Watch how. Is it going to be a uniform, nice, controlled ascent, or is it going to be one of these just bam, where it takes off like it did over here? Now, in the recent past, the wedge ups or the flags have not been that great. Here is a nice, little flag. It was fairly steep that broke today, but you would not have been able to participate in that trade because it actually opened down here. So this is a huge gap down. That actually doesn't reflect on the daily chart, but it would reflect on the 1 hour or half hour, 15-minute chart. As you can see, this is almost a classic of a continuation of a downtrend. Is that price action on, or the action on the TSI actually got up here just slightly above. Got up here slightly above the zero line, which if this is acting below the zero line, that typically means that the price action isn't a downtrend, gets slightly up to the zero line, then rejects it and has turned back over. Again, also the momentum is turned over on a daily chart. And on a weekly chart, we get this very interesting, here's one of the things that Mike was talking about. Mike, I know you see this. And one of the reasons I switched over from a histogram on the momentum to a line chart is because it makes the patterns on the momentum show up so much better. And so that when you get a break of that, that typically corresponds to a significant move or trend change. As we can see here, we get this kind of double top type of formation here on the momentum. You get kind of a double top with divergence on the true strength indicator, and that corresponds with that signal there, confirmed by then this reversal signal where we close below the low of the high day of the last 20 candles, and then we get a rebound yesterday on the weekly chart, but then the rebound yesterday, as you can see, was quickly thwarted today. And if we close where we are currently, we will close at this is the 40-week moving average, which equates to the 200, and this is the 20-week moving average, which equates to approximately the 100, and the 8 is approximately the level of the 50-day moving average. And as you can see, we have now closed below that. It has cut through both of those. And the last time it did that, Mike, we get this nice little rebound off the support of the moving averages for a nice little rebound here. But it remains to be seen whether or not we get another bounce off of here. What do you think?
Well, this 2040 area on the S&P has been a pretty strong level of price support going back now for about 2 or 3 months.
Right.
And even now, since we've started this webcast, and I'm watching this, live, 2040 is presenting even intraday kind of a line in the sand right now.
Yes.
If 2040 were to break next week,
okay,
to the downside, then the moving averages come into play, or the next area of price support.
Correct.
But for now, and until proven otherwise, 2040 is kind of a line in the sand here on the S&P chart.
Exactly. Yeah, it definitely is. If we throw on a fib retracement on this, if we throw in a fib retracement on this, let me get it to here, and I think I go from here to here, and this is the fib extensions, and I did them backwards. We go from here to that swing low, back to this swing high. Isn't it interesting that one of the favorite, if we break out of this 100% retracement or maintain symmetry with this downturn here, we're at that point right now. Where are the favorite targets or the probability targets for dropping? It's well one at the 1236 here or the 1618. And those are the areas where we would expect to fall to. And isn't it interesting that both of those correspond to really past strong support? And that's right in that area you were talking about, Mike, which is at basically almost at the bottom of that candle right there. So that would not be a surprise if we hit those downside targets and then do a little bit of a rebound. Now we have if we, with today's action, we have reinstituted at least a short-term downtrend with this lower high and now this lower low, and we'll see if it reacts. We're going to see where it reacts off of. I'm just, I've been really studying the Fibonacci extensions significantly, and I am just constantly amazed at how well they, provide a prediction at least of where things might go. And we'll be doing another training on those, on the fib extensions for, picking targets in the very near future. So thoughts on the S&P, Michael or Mike?
Well, what I find very interesting is all the US indices, but also the European ones are still in a trading range and kind of following the, I think it's still a technical thing and not, and it has not falling down extremely.
Okay. And so as you can see here, Mike, you have anything on that?
I don't really think I have anything to add beyond what I've stated already. I mean, we always have to keep in mind, too, at what level the central banks are going to intervene in this and how much of an effect that intervention will have. They've already come out and made noise about their intent to not let the market drop very much. They've already come out this morning and made those intentions known.
Okay. Well, one of the things that
Dennis, if you quickly enter EWU, that's the ETF for Great Britain.
Hold on just a second. EWU. Okay. Yeah, it's not a buy to me. Look at it.
You see, even the worst case has been priced in, so we have not no new lows.
Yeah, that is very interesting. How it basically, this was bouncing. It bounced about the same time as the U.S. market did last year, and it's reacting very similar. I mean, it seems like so. Thanks for sharing that.
But if you imagine this is kind of a century event, then it's still no panic around.
Yeah. Well, I think we can see that in that while the VIX did spike up today, it quickly resettled itself. So, okay, trading the NASDAQ and or the Qs, if you're going to trade the Qs going into next week, we have made almost a complete 100% retracement from the complete May rally. Dropped off today, fell down, met right at the support level, and is trying to do a little bit of a bounce. I would, like I said, I would be looking for something, an orderly, uniform type of uptick into a little flag, and that can be 3 to 5 to 6 to 7 days, or if on a weekly basis it could be actually a little bit longer, and wait for that to potentially roll back over. The NASDAQ has in fact though busted through its 200-day moving average, 100 and 200-day moving average, and so it clearly is the weakest of the 3 indices that we track, and it's got a nice move down. Again, we can apply that concept of if it breaks this level, that 1, 2, 3 retracement and or the 162 retracement down here becomes, you know, preferable targets, with the hitting the 1, 2, 3 having a higher, you know, definitely a higher probability. And how much of a drop is that? Just to give you a concept on that, well, from there to there is approximately a 1.35 drop. And if we go back to the highs of last year, which is here, you know, before this has got to drop, okay, like right now, it's only down 9.9% from last, you know, from its high of last year. To be even considered in a bear market, it has got to go down 20%. I keep going. So it's got to actually retest the low that was made on August of 2015 last year. From what I'm seeing right now, I think that's definitely a possibility, guys, for us to actually have some more significant selling. And I think that if the initial selling is really, you know, uniform drop in a that, you know, rather than these big plunge daily or weekly plunges, I think that will scare the pants off a lot of people. Russell. Okay, Russell's in the process. I put the fibs on from for the May rally. It has stopped dead in the water, just below. It has broken below the 50, but it stopped dead in the water at the 618 retracement. And again, if it is going to be turning over, I would be looking next week for a retracement up into the middle third of this, and then if it reverses off of that, because we may get a little bit of a dead cat bounce, if you will, up off of this, if it rebounds into this middle section on the magic fib box, that's where I'd be looking at, you know, potentially entering some short positions down to the short side on the Russell, the IWM, RTNA, RTZA. So that's what I'm seeing right now, guys. I mean, we'll see how the market closes today to see if it rallies into the close. But right now, that's about all that I'm seeing. And so I want to throw up one thing here really quick on the SPX. Those of you who have been trading the XPX with us, we did an iron straddle, or an iron condor, but we're using the same strike price for the short call and short put yesterday. We collected $9.30 worth of premium. That means that on the SPX, using their options, that means that our risk on the trade was 70 cents, or for one contract wide iron straddle was, you know, $70, with the potential of picking up 940 if it settled at and closed at, pinned at, if you will, 2100. I doubt that that's going to happen today. But, you know, regardless, that particular trade is a cash settled trade, so literally I have to do nothing to it other than just let it expire, and over the weekend, and basically they cash settle it in my account. I don't have to worry about it. Nothing will be assigned to me. But it's sometimes those you know, straddles like that can work out very good. In order for that one to be profitable, I had to close somewhere between 2110 and 2090, a 20-point range. As you can see, we have definitely exceeded that range. And so let's go on to back over here. Okay, just rolling out path of least resistance. Okay, I'm going to ask you guys, Mike Traeger, what do you think the path of least resistance is right now?
Well, you know, I want to say down, but the last few weeks doesn't support that, so I'm going to say sideways.
Okay. Michael Bishop, your turn.
I think we have a strong resistance on the upside.
Okay.
And if this breaks, then we could get into a complacency, not a even worse, not a complacency market, but a market where suddenly everybody thinks that that they have to jump into stocks. But just my feeling is that it's unlikely.
Okay, so path of least resistance, up, down, or sideways over the next couple of weeks.
Down. So if I have to bet, then down.
Okay, and well, I'm not going to disappoint, guys, because I agree with both of them. I think that in the short term we may see a little bit of sideways movement, sideways to slightly up, certainly not up like over here, but up to hit a point where it hits resistance by either the moving averages and/or and then lets it drop from there. And I would plan. Remember what we talked about the other night? We were talking about these thrust downs, reactions up. I would be waiting for this reaction up, and sometimes, unfortunately, when you get into a downtrend or even an uptrend, sometimes these little the reversal reactions don't take a lot of time. So as soon as it basically puts in, you know, first starting its move up, start planning for potential downside at that point, but be patient. Be patient. Wait for those trend candles to take place. Yeah. Interesting times. So let's see what else we got going on here. Because we increased the amount on our strategy number 3 to now hold 2 long leaps in Tesla and 2 long call leaps and 2 long put leaps on Tesla, we've accelerated our growth on the strategy number 3. We had a GLD trade, a little based on the seasonality of gold, with the potential of it going up into the end of between the now and the midsection of August. That helped you know, add to the profit here. We had a little bit of a reversal, and we had to take some a loss on one trade early. Well, I think we took that last week, and so we're continuing to punch up a little bit higher. My objective through the end of July, or correction, through the end of June, is to basically close the gap on my equity curve. And so the amount that has to be closed right here between these two, between the end of here now and the end of June, which is next Friday, I think, or next Thursday, is to be, and that's about a $3,000 gap. We'll be looking at trying to get that closed. So we'll be back on track for our the straight line here is my target 40% per year, and that's what my objective is over the next week, is to get that as closed as possible. And so, okay. Speaking of the Tesla, And so, speaking of the Tesla trade, one of the first half of the Tesla trade was on the position that we opened last September. It is closing on hitting its 100% profit target that we had for it. We have paid off, and this is basically taking into account the value that is still in the two long January leaps, plus what's been collected so far, balancing those out. We have already paid for the investment of $9,010, and so that's going well. And we have, on top of that, collected another 12,064. No, sorry, it's 12,644 against that, but because of the decrease in value of that capital investment, turns out to a net gain of about $7,000. So we've paid for the $9,000 plus the value that's still in the LEAP options comes out to this, and so we're pushing 78%. As soon as that gets to 100%, I will close this leg of this part of this trade, because I will have met my objective, and then we will retool to go into an additional Tesla trade, or if something else comes along that makes more sense than Tesla. I know that there was a bunch of junk with Tesla getting ripped because they're going to potentially buy Solar City this week. I will not make a comment on that. I'm just going to be watching for Tesla. If it continues to show good patterns, then I will continue to work with it. And remember, Tesla has been down as low as $140 this year. And so, yeah, I mean, for Mike, the thing that Goldman Sachs did with Tesla, how in the world did they know 30 minutes before? It makes me want to puke.
We talked about that Wednesday night. There was an interesting little piece, I think, in the Wall Street Journal yesterday. It was an op-ed thing. It wasn't a factual article about Tesla and this transaction with Solar City.
Yeah.
It wasn't favorable.
Oh, yeah. I mean, the stockholders are basically, I've been reading some stuff that the stockholders are going to take Musk to court, and all that kind of stuff. So it's really kind of a wet and wild kind of thing.
Well, for anybody who's curious about, just the entertainment value in watching this, keep in mind that Musk, in addition to what he does with Tesla, is also the chairman of the board at Solar City.
Yeah.
And owns, north of 20 million shares in Solar City himself, which gives him, I think, an ownership position in Solar City of, he owns like 20-25% of Solar City.
Yeah.
And in addition to Tesla, and certainly, this is an all-stock transaction. It's a stock swap, basically, of Tesla stock for Solar City stock. It's just, you can give Elon Musk a lot of credit for a lot of things, but man, this is just a really dirty transaction.
Yeah, the other thing part about it is it's really interesting and really funny is that it's Elon Musk's cousin who runs Solar City.
Yeah, the cousin's the CEO, and I guess Musk provided some financial support initially, or some kind of consulting support, and so was brought in to be the chairman of the board and given a large equity position, and here we are, and keep in mind that as a combined company, if this actually does go through, I mean, Tesla does not make any money, overall.
Oh, yeah.
They get a lot of tax credits from the federal government in order to raise capital. They're constantly issuing more stock. Solar City is also burning through cash and doesn't make any money. And now you're talking about combining these two entities on the hopes of, exactly what?
Yeah. Well, there's an old country western song that used to go along. It's on the hopes of a clear snow white dove. Anyway, but that's that's from my Texas days, and I won't sing any more of that. Probably you're glad I'm not singing anymore.
Thank you.
Okay.
Thanks.
You know,
no, actually, I think it's a typical financial engineering deal, and that's on the longer end never a good thing for a shareholder.
Yeah. I mean,
well, yeah, it's absolutely a financial engineering feat, but who benefits? And right now, the biggest beneficiary is Elon Musk himself, only because the value of his substantial stock holdings in SolarCity is going up.
Yeah.
Yeah.
So, well, one of the as you were saying that Tesla doesn't make any money, I was thinking to myself, yeah, and SolarCity even makes less.
Yeah, I mean, Tesla should be really be more than busy to produce the first mass car.
Yeah.
With the Model 3, and I don't know if it's a good thing that management.
Well, my wife has already told me. She said, please continue. You're doing really good trading Tesla. Please continue trading Tesla so she can buy a new Lexus.
You mean she doesn't want to get on the waiting list for a Model 3?
Heavens no! And no, plus she likes her. She's had her Lexus now for like 14 years, and she absolutely loves it. I mean, I don't think even if even if I was able to do it with the Tesla trade, I don't think she would want to trade hers in. I mean, they'd have to, basically just take it from her cold dead hands. She would not want to give up her current car. And it's a dynamic car. We brought it back to Hawaii with us. Here's a trade that we did earlier in the week. I was talking about the seasonality in gold. Gino, who asked a question earlier? Eric asked a question earlier. Why did I take profits early on this particular trade? I took a partial profit on the trade today, but anyway, the way it worked is understanding that July, from the later part of June into July, August tends to be a very bullish time for gold. On this pullback, we entered a trade at 622 with an expiration in August. I bought, but how I did it to provide some protection is I did a 122, 127 debit spread, which means basically I paid for it. I defined my risk up front. I paid $1.49 for this particular trade. It was bouncing off the 20-day moving average, so I entered it on 622, which is here at $1.49. I had originally estimated my T1 as being somewhere at about $3. I wanted to make a 100% of my initial investment, and I was going to take half the position off at that point. That way the rest of the trade is just typically free. We get the big blow up today too quickly in reality, as gold leapt up here. And when I say too quickly, the theta decay, the time decay hadn't taken enough effect on it, and so that's where I sent out the alert and said, okay, drop the amount you're willing to take for this down to $2.80. Later I went down ahead to $2.50 because if this would have been if it would have jumped up this high, let's say the 4 weeks from now, we would have hit our $3 mark. But my target here is, of course, so I went ahead and took the profit, 67% gain at 250. My T2 is for gold to continue rallying. If it rallies back up towards or above $27, I'll be able to close that out prior to the 17th of August at somewhere between $4.80, and if it really gets going, where it's above 127 at August 17th, it'll be closer to $5. So my initial profit is $330. I think I had a lot size of, well, I've got a lot size of 12 contracts, but now it's down to 9. And it was just part of our strategy to trade, and so we'll continue to monitor this and see where it's going from here. So this week, we will be coming out with announcements this weekend regarding the 2 webinars that we'll be having for the Bay Area Moneymakers for the month of July. I will be back on the mainland from August, September, first part of October, and be able to do we will do in-person BAM meetings on for those 3 months. Training is coming Wednesday night, 6:30 p.m. That's Pacific Daylight Savings Time. We're going to be doing Keltner and the M&As. I'm pulling together and working on putting together a special training for the How to Do Strategy 3 that several people have asked about. My wife and I finally got down to the beach. This is the beach I see from my back porch, or lanai as they say here in Hawaii. And so we went down and took some pictures and just stuck our feet in the water and said, oh, life is good. And then came back up, and by that time it was almost, I knew what was going to have on in Great Britain with the Brexit. And so I'm going, uh-oh, what's going to happen now? One reminder that Active Trend Trading, our motto is to clarify, simplify, multiply, and I continue to work on that. We basically focus on 5 pillars of active trend trading: what to trade, when to enter, when to exit, what strategy we're going to use, and what to expect. I believe that everybody needs to start with a sound system, and then you add your strategies to that system, but your rules that are driving the system are what drive in your entries in each one of the various strategies that you attach to it. We try to keep it simple, no more than 3 strategies. And so anyway, we will see you next week. Have a great weekend. Michael and Mike, thanks for joining today. I got time to look at a few stocks. Any final thoughts, Michael or Mike? Michael, where are you going on vacation next?
Me?
Yeah.
France. First week of August, I will be. A friend of mine is an organizer of a cycling event, and I will participate there. Looking forward. Need a little bit of training. July,
okay.
So that's cool.
Sounds good.
Yeah. I mean, final thoughts. In East Germany, lying on the beach, I read a book of Robert Schiller, and he examined how the last big crashes happened, and interestingly, the crash has never immediately followed an event. So in other words, the market needs some time to digest the events, and then all of a sudden participants start to sell, most time in a calm in a period with low volatility.
Ah, okay. That's very good.
So this could still happen, even we have now almost end of June.
Okay.
So,
Mike Traeger.
Well, it is true with previous crashes, at least in the U.S. equity markets, that the crashes and the really steep sell-offs happen after there's already been a preliminary period of selling.
Right.
I mean, it doesn't crash right from the very top. There would be a period of sort of choppy selling and a moderate decrease in price levels, and then the bottom. Everybody wakes up one morning and the bottom just starts falling out, and it remains to be seen if today is maybe the beginning of that process, or something else. As we're sitting here talking, the S&P has broken down through that 2040 level. We're at about 2035 right now, with the understanding that support and resistance are not hard and fast single numbers, but more zones.
Right.
And still, we're in a support zone at this price, but everybody throws that 2040 number around, and we're beginning to break below it, at least intraday.
Yeah. And so, again, if we went back to the, and I suggest this, you know, in everybody's review. You said something the other night, Mike, that just kind of, that really caught my attention. You said that or maybe it was, I can't remember if it was last night or yesterday, where we were talking about black swan events, and you know, it said, well, this is kind of like a black swan event, but then you said, no, it's not, because everybody knows this is what's going on in Great Britain. So you really couldn't.
Well, black swans by definition are unforeseen, you know, happenings or events.
Right.
And certainly it was not unforeseen that there was a referendum coming and that it could go one way or another, and if it went the way it did, that there would be at least some short-term volatility. So that doesn't meet the definition of a black swan, because, you know, everybody kind of knew what was going on.
Right.
You know, the big black swan event would be, and again, you know, people would see it coming if it were to happen. But let's say Germany were to hold a referendum and decide to leave the European Union, and Germany is certainly a big linchpin in the EU. Well, you know, again, that referendum wouldn't come up overnight, but that would be a huge black swan type event, because at least as of right now, nobody can even fathom something like that happening.
You know, but the thing about it is, and we'll get in here and we'll look at some stocks shortly after this is that I would think that when the countries joined the European Union, they gave up some of their sovereignty, right? They gave up their border control. They gave up, you know, to join this for primarily economic reasons. But the thing about it is, you know, Germany, Great Britain, the stronger countries there have gone to the mat multiple times for the weaker countries, the pigs, if you will, and don't you think that they get tired of bailing out the pigs?
Well, they absolutely do, and I know, and I hate to sort of off because Michael's living there, but you know, I know that's especially true in Germany. I mean, the German public is just completely fed up with bailing out, you know, Greece and Italy and Spain, and to a mildly lesser extent, that's true of a lot of the Northern European countries, like Sweden and Norway, and you know, what you're seeing here with the British exit, and if there are any other referendums coming down the pike, people are fed up, and they're fed up enough. I mean, the European Union, I agree, started out the way you said it started out, but you know, the bureaucracy in Brussels has morphed into something completely different, where they're handing down edicts in terms of border control and immigration, that the individual, you know, nations and the population of those individual nations are really beginning to strike back against, because it's affecting their daily quality of life. And they've, I think, you know, in Britain they've reached their breaking point. I think in some other countries they're getting close to it. And the only way to try to combat those dictates out of Brussels are, you know, to reestablish their sovereignty. Yeah. Because those people in Brussels are not elected. They weren't elected to be there. They're political appointments, and they can't be voted out. Yeah. Either.
It's the same way that a lot of Americans feel about the UN, and so.
Well, and if anybody wonders, you know, where Donald Trump's support base comes from, it comes from people in America who have similar feelings about, you know, U.S. issues that the people in Europe are feeling about their issues. Okay. And Trump is very much, at least, you know, in their minds, sort of, you know, not from that establishment that has gotten these people ticked off.
Oh yeah. So anyway, okay, I'm going to draw that discussion to a close because we're past our time. I'll look at a couple of charts. I want to thank both Mike Traeger and Michael Bishop for joining us at this. This could be just a historic day We'll see. We'll see going forward. So, any stocks to review really quickly, guys? Let's see how the gold trade's doing. GLD. Okay, it's jumped itself back up to 126. So if you're trading that, you can choose to hold it and see if you can get $3 for it. But I decided 50 cents was close enough for me to bail out on that. Let's see. We've got. Do I plan to sell the Tesla 3, Strategy 3 Tesla calls today, Kieran? No, I do not. When I get off this, I will go back and let's take a real quick look at Tesla, see what it is doing. Actually, it's pulling back up. It's back up with the 192 level. I like this on Tesla. Look, it's holding that 618 retracement, and so that might be a sound trade going into the end of the day. And I know that you got to experience the same thing I did in one of my other accounts where I was actually short a put, but I was short the 212 and 217 puts that expire today, and I didn't. Nothing was assigned last night. I hope you found it the same way, and so I'll look to roll those down and into. Probably the 192 or even the 190 puts are maybe one of each. Let's see, what else we got here? We've got CIM. What is CIM, by the way? Who asked about CIM? Gino, if you're still there. Oh, 2 REITs, okay. Looking longer term, yeah, it's coming out of this nice little, pattern down here. It looks like it's looking to climb. Pays a dividend of 11 cents. If I were looking to get into it, Gino, I would be basically looking for it's in the process of doing a thrust, and it's already done a thrust here. So it's getting ready to a point where if it maintains somewhat of symmetry on this thrust, it's going to roll back over. And then I would look for it to then maintain symmetry on, so in other words, you've got this thrust up to here, a pullback, thrust up to here, and that's about equivalent, and so I'd be looking for at least some kind of equivalency of a pullback. That's for it maintaining symmetry with what it's done here. Before it goes higher, I again would have to run the market checkup on it for the fundamentals, but that's what I'm seeing from that aspect. A little bit of indecision today. Where's it? It has pushed back up to the top of its range. So, and as you can see here, it's actually gotten where it's dropped the high of the low day here and here. And let's see, let's take a look at the other one, which is CSAL. Okay, again, a similar type of situation. It's pushing on up. This is kind of a big mover, but it's made its way up to the top of the 20-day moving average envelope on a weekly chart. That's when they tend to pull back towards, at least try to some kind of reversion back to the means of the moving averages. Same thing what you're seeing here. Again, you can take this as your thrust up. Did another one that was approximation. This one's a little bit steeper. That may be a little bit of an exhaustion move. Okay, we've got price line. Under price line, understood. Oh, yeah, that's a drop. It's following the market, Eric. Let's see what happens. I mean, I never, I won't say never, but I try not to act when I see this, because that huge of a reaction to the downside is just, it's almost untradeable unless you go to an intraday chart. And so if I'm just going through and looking at my daily charts and I see something like that, I go, okay, nothing interests me about that right now. Where does it interest me at? I will tell you that, is when it retraces back up into the middle third of its of this huge body, which would put it right back up towards the moving averages, the 100 and 200-day moving average cluster, and which also is going to correspond pretty close to about these levels here on the weekly chart. So, okay, folks, I am going to call it a day. I've got to get ready for the movers to come and unpack my furniture. Thanks a lot for joining us today, and just have a great weekend, and keep your, don't be in a hurry to jump into things. We do have time. Eugene, glad to see you made it. I should ask for a perspective from Ireland on what's going on with the Great Britain leaving the EU. Okay, God bless everybody. See you later.